Hey, what's going on YouTube? Welcome back to another awesome video. In today's episode, as you probably know, we're going to be talking about a platform that deals with CRM. It happens to be the #1 CRM platform in the world. And if you don't know what that is and you haven't heard of it, it is Salesforce. And of course, this is an investing channel, so we're going to take a look at whether or not Salesforce might be a good investment or not. We're going to do a complete stock analysis. That's what we do best on this channel. So if you like stuff like this, make sure you like this video, but more importantly, subscribe so you don't ever miss another awesome video like this one. And by the end of this video, not only are you going to be extremely educated on whether or not Salesforce might be a good buy for the future, but in addition, I will also share with you my personal beliefs about Salesforce and whether or not I'm buying, and if I am buying, where I would personally purchase more shares. So without any further ado, let's talk about Salesforce. Let's go. All right, so here we have Salesforce, and it's trading at $240. For those of you who don't know, it's just ticker symbol CRM. Pretty easy to remember. And we'll look at the price action a little bit further, but as you can tell, it's pretty much been trailing up and up and up over the last 5 years. In fact, if you go to the max, it's actually been trending up and up and up for a lot longer than that, but the 5-year tells us a really good story, meaning it's pretty much tripled in price from this $80 about 5 years ago all the way to around $240 now, and it's been as high as $270, and in the last 5 years, it's been as low as $68. So obviously, if you're dollar cost averaging, or if you bought a big chunk just a few years back, you'd be sitting pretty well as of right now. But what is Salesforce? What do they do? What products do they sell? So real quickly, if you haven't been to their website, here is their website. They recently acquired Slack. If you guys don't know Slack, we'll talk about that in a little bit, but I think it was December of 2020. That is when they bought Slack, and that is actually something that really benefited their overall trajectory. So next, we have Salesforce. If you guys don't know what this is, here's pretty much everything that they cover with their Einstein AI, which is actually super cool because not a lot of CRM have so many tools at your disposal all in one. And that's what Salesforce aims to do. And if you've never used their platform before, this is kind of what it looks like. Dashboard, if you will, of all your metrics in one hub, which is really nice. But there's a ton of use applications that is within Salesforce. But before we dive into the numbers, the figures, their balance sheet, all that fun stuff, let's talk about the acquisition. So here we have the article talking about the $27.7 billion acquisition by Salesforce and why Danny Vena at Motley Fool thinks that it was brilliant. So in early December, Salesforce.com announced that it would acquire workplace communication tool Slack Technologies for roughly $28 billion. This was by far the company's largest acquisition to date. Investors weren't impressed by the deal, sending Salesforce shares down 8% in the wake of the announcement. So he notes here that 90% of Slack customers are already Salesforce customers. So there's a lot of overlap here, meaning integration is probably very simple. Now, there are going to be a lot of Salesforce customers that are going to be hearing from Salesforce and their sales and marketing representatives who are going to be encouraging them, I would say, to add Slack to their suite of tools. I think this is a really good move for Salesforce. It's brilliant in that they never really had a slick interface. It was okay. A lot of people said just that. It was okay, but it wasn't really slick. And to be honest, the Slack interface is very easy to use. It's widely intuitive, so I think this is a good move for Salesforce. I heard a lot of talk about whether or not they'd be able to create their own Slack-like tool within Salesforce. Now there's no reason to reinvent the wheel. So that's kind of where we're sitting with Slack. And honestly, I think it was a great move by them. Sometimes it's better to just acquire a company versus trying to put more eggs into a different basket and just build up something new. Facebook had a very similar interaction with Instagram. They bought them for around $1 billion, I believe, and now it's worth so much more. And Facebook could have built that out. In fact, they did. They have stories on Facebook too now, but it's just a different platform, and they were able to bring Instagram so much higher as far as valuation of the company versus trying to reinvent Facebook. So even though this is not really a social media platform that we're talking about here, but this is something that might be very similar in that respect. So next, let's talk about the Salesforce customer growth. So here we have an article from March 31st, 2021, where it talks about Sales Cloud revenue shows 12.83% annual growth in 2021 thus far. Service Cloud is a service management platform that helps companies deliver personalized customer service. In fact, Salesforce Service Cloud revenue has grown 2.96x since 2016. It now accounts for 26% of all subscription and support revenue. And if you're unfamiliar with CRM or Salesforce competition, here are some of their competitors. As you can tell, you either have maybe heard of these or you might have never heard of these. But regardless, which one stands out of all of these is Salesforce. Sure, these companies are trying to make a better product than Salesforce, of course, right? That's the whole goal, to beat out the company at the number one top spot. But so far, Salesforce seems to be leading the pack. And let's talk about the price just a little bit. As you can tell, it is going up and up and up, and more recently it was a little bit shaky. Obviously this is during the pandemic here where the price did drop almost in half, not quite, but if you took this, it was around 30%. So there you have a 30% drop. If you bought down here, you would be sitting quite nicely, almost double that price here. But let's look at this really recent price action because there's something interesting going on. So we are making lower lows here. Only recently are we about to break over this previous high of 236. From a technical standpoint, if we close above this point, which we kind of did today, technically speaking, we'll probably reach somewhere in the 248 zone and touch there. If we can surpass that and close above that, we'll go into the next high and the next high, and potentially we will reach all-time highs once again. But that doesn't mean that that pattern could not break very, very soon as well. As you can see, we have been going lower and lower and lower. Even if this goes beyond this, we could see 248 for a day or two, and if it doesn't break above that, well, then it's probably going to tumble back down, and we'll see maybe a 217, possibly a 215 Salesforce in the near future, and it might even find support somewhere in the low 200s. Now, I will tell you a little bit later in the video what my strategy looks like with Salesforce, but first, let's talk about their PE ratio, because Salesforce is sitting at a 50 PE. It's a little high. Now, for the technology sector, it's not that high. So let's look at now the financial performance. So as you can see, we see the revenue keep increasing year over year over year. We also see the net income going up as well. 2020 was a bit of a rough year. They still pulled off a lot of revenue, but their net income crashed quite a bit. And from the looks of it, they might have reported their Slack acquisition right here. And if they did, from a financial standpoint, they did an amazing job still being a little bit profitable on their net income in 2020. Now 2021, all the numbers look good, and we'll just have to see what the next year brings. But so far, everything is looking good. The only thing is the operating income. Everything else has been positive and going up. And the numbers you want to watch now, the company is in its maturity, is the net income going up and up and up. So here we have the executive summary for Salesforce. And as you can see here, some of the rewards is that Salesforce is trading at 19.5 below their estimate of its fair value. And we'll get into that in just a second. Earnings are forecast to grow 30% per year. They became fully profitable this year. And as you can see, they've been profitable before, but in 2020, they were not that profitable. So technically they've re-entered profitability. And then some of the risks here is large one-off items impacting financial results, significant insider selling over the past 3 months, and shareholders have been diluted in the past year, meaning they've added more shares. Let's talk about their valuation, because they did say it's underpriced. So Salesforce is about 19% undervalued compared to its fair value. And obviously this is comparing their PE ratio. So they are saying that compared to other companies like it in the market, other tech giants, they're actually sitting at below fair value, just slightly below fair value, 19%. That does make you think, hey, could this company go higher? Sure. We see a lot of companies in the overvalued section, and that's probably where you don't want to buy. So when you see a company that's sitting undervalued, that can be seen as one of the first indicators for possibly wanting to get into something. So not bad. And next we have the future growth potential. Now, sometimes this is based off of 3 analysts, sometimes it's based off of 100 analysts. In this case, it's basing this data from 41 analysts, and analysts aren't always 100% accurate, so take this with a grain of salt. But so far, here are the revenue and their earnings, and as you can see, they're projecting that it will probably dip back down, this probably has a lot to do with them still trying to grow different aspects of their business versus being just stuck in one industry. Although they are the number one player, so it's not necessarily bad to be stuck. If anything, they're stuck between success and a lot of money. But regardless, it is important for them to diversify some of their business. And that's what it looks like the analysts are projecting here, that they're gonna not make as much money because they'll probably be making more acquisitions. We don't know, and only time will tell, but the future growth looks really good. 30% year over year is still fairly good, especially for a company of their size. Now let's talk about past performance, because this gives you an idea of what their potential could be. Now, it doesn't necessarily mean that just because they did 60% in the past, that they're gonna do 60% in the future. If anything, companies typically slow down. So 60% past performance, and if we're expecting about 30%, it sounds like it's doable, right? So that's just something to pay attention to. And if you want to be able to see the future, just pay attention to the quarterlies and compare them to year over year quarterlies from the previous 2-3 years. And that will be a good telltale sign of where they might end up at the end of each year. So here we have their balance sheet. This is something that's so important and is so overlooked, but most balance sheets are really boring to look at. And I found this website that shows a really nice presentation of a balance sheet. As you can see, it's called Simply Wall Street for those of you who want to know what it is. But here you have long-term and other assets. These are all assets on the left, and these are liabilities plus equity on the right. But the big one that you want to pay attention to is their debt bubble. And as you can see, their debt bubble is fairly small. Now, obviously, this doesn't show whether this is like long-term debt or short-term debt, but when a bubble is this small, it doesn't really matter. They have almost 10x, 7.5x or something like that, sitting in cash and short-term investments right here that they could liquidate and just pay off their debt. But they don't want to, because why use your own money to invest and grow your business when you could be using someone else's, especially when you don't have a lot that you're borrowing. So relative to their company size, they have a 1-to-100 debt ratio. That's actually really good. So meaning their company is worth 200 something billion and their debt is only 2 billion. That's what I like to see. So on to their dividend. Now they don't pay a big dividend, as you can see, 0.01. If anything, just think about them as a company that doesn't pay a dividend at all, because really they don't. And most technology companies don't. If you find one that does, like Apple is a good example, that at least pays some sort of dividend, that's great. But there's not a lot of companies that do end up paying a dividend in the long term as far as big tech giant. Google, Facebook, Shopify, Tesla, none of these companies pay a dividend. So that's something just to brush over, and it doesn't really matter all that much. Unless you're heavily wanting to have a dividend portfolio, then I would just stay away from a company like this. Now, the top shareholders is something to pay attention to, because when you think about insider selling, these are the people who would be selling. So top 25 shareholders own 52.9% of the company as of right now. Most of these shares belong to the Vanguard Group, FMR LLC, BlackRock, T. Rowe Price, and these are companies that are very well known and are most likely not just going to dump all their shares. Now, that doesn't mean that they won't sell at all. Like if you look at Wellington Management Group LLP, they made 29% on their shares and they own 13 million shares. So it wouldn't come to a surprise to me if they decide, hey, let's dump $1 billion worth of shares. Now, that wouldn't necessarily hurt the price all that much, but it will affect the price in the short term. So this is just something to pay attention to. Again, FMR LLC, they're down 8%. They could either trim their position or they can add more on the way down. That is another thing to pay attention to. This is just good data for you to kind of keep at the back of your head. And if you see a big drastic price shift, you can go ahead and take a look at this and see what has changed, because these are the people that are really, at the end of the day, gonna move the stock. Now you have the fundamentals of the business. You know what Salesforce is all about. Where would I personally buy in? For example, if I was looking at the stock for the first time from a technical analysis standpoint, and I said, okay, I know the fundamentals of the business, now you do too, and I know their future potential growth, I know on paper they look like a very good company, good balance sheet, etc., where would I make an entry? Well, first of all, I always like to dollar cost average in. If you don't know what that is, go look it up. I have a video on it. But from a relatively technical standpoint, we're experiencing this descending triangle here right now. Before this new trend line, we were in a relatively healthy uptrend movement. And that doesn't mean that that has necessarily stopped. Now, we also haven't touched this 201 support. We got really close back here at 209. Now, if we can clear above 240 like we have today, and we lock above 246, and then we lock above 258, etc., and you just keep seeing it trickle up, but then we bounce off 271, for example, well, we could go all the way back down to 201. So that's where I'd personally place some limit orders. 201, I'd probably place some more at 198. I'd probably even put some at 189. And if you want to get real ballsy, you can go down as low as 162 and place some limit orders down there. Now, limit orders don't really hurt you and they don't execute unless the price actually gets to that point. So it's kind of nice to just set some up if you're thinking about buying the stock and you're already dollar cost averaging in slowly anyway, so you have some exposure to the stock no matter where the price goes. When we're long-term investors, we want to have dollar cost averaging strategies in place for the stocks that we like the most for the foreseeable future, whatever our investment window is, whether it's 5, 10, 20, 30 years. Obviously, you're not going to find every single gem, but with this strategy, you don't really have to. So that's something that I would pay attention to. I'd put my limit orders here, I'd dollar cost average in, and if we start to see a trickle up, I'd be buying a little bit more. And then if we see a price break above 271.10 right here, we see a break above that, that would confirm that we're ongoing onto a healthy upward trajectory, and I would continuously buy, and I would add even a bigger and bigger position as it breaks through this top. Now, obviously that's thinking from a trader's perspective, but when you're thinking about technical analysis, that's how you have to think. And of course, taking profits along the way is also important. So if this stock goes to $300-$400 a share and the revenue doesn't move a lot, but their PE ratio gets out of control, let's say 100, which is above the industry standard, then I would dollar cost average out. Honestly, that's a really good tool to have in your tool belt, especially when you've made a decent amount of profit in a short period of time. Now, if we put our thinking caps on, obviously there are a ton of stocks that have a lot of potential, so staying somewhat diversified is really important. So if you want to learn more about stocks that I personally like, I have a playlist called Top Stocks to Buy. It's on my channel, so make sure you subscribe, and then I'll link it up here. You'll see a pop-up come up if you want to go check that out. And if you haven't already, make sure you like this video. If you want me to do any more analysis on any company that you personally are thinking about investing or already invested in, leave it down in the comment section below. I'd be more than happy to oblige. Don't miss out on getting your free stocks. Down in the description below, I have a bunch of links for you to get your free stocks with like Public, Robinhood, Webull, Stash, M1 Finance, all these different kinds of companies. If you haven't already, go ahead and do that because it's literally free money. These companies are just throwing at you to start an account. Most of the time, you don't even have to deposit more than $100 and you just get free money handed to you. And you can always sell those stocks and put it into your main account for absolutely free. So why not? And if you use any of my referral links, let me know down in the comment section below so I can give you a personal thank you. And if you made it this far, thank you all so much for watching. I'll see you guys in the next episode. Peace out.